Welcome, everyone, and thank you for joining us today. My name is Don Chiesa. I'm one of the VPs of lending here at Newrez. I have over 35 years in the business. Recently joined the Newrez family with all the strengths they have to offer. At Newrez, we're excited to continue expanding our production of the non-QM loans, an area where we've seen tremendous growth and momentum. Backed by the strength of our parent company, which actively securitizes this product, we are uniquely positioned to offer competitive products for our partners to expand their production. I'm just excited about that. I think we should be a leader in the market because of that. Last month, when we rolled that out, we received overwhelming amount of positive feedback with the enhanced guidelines we rolled out, and we covered a lot of ground, and your insight was invaluable. And so one of the pieces of feedback was, could we go deeper on each of the individual products we have? And so throughout the month of July, we're going to be doing exactly that. We're going to have a 4-part series once every week. So chat with your AE, get access to that session, because we're going to spotlight each of our core non-QM products, incorporating real feedback from our partners. We're going to have one on this call today. And so let me get started and start to introduce a few of the folks that have joined us today. So first of all, Jevon Stafiria. Jevon Stafiria is the vice president of our underwriting. He oversees all of our non-QM underwriters, manages all of our product guidelines and enhancements. So Jevon, thank you for joining the call. We do also have Libby Shambo, account executive with over 12 years here at Newrez and over 25 years in the business with over a decade at Wells Fargo. Also, as you see on the screen, Alec Belakwe.
Bevelakwe. Good job. Bevelakwe. There you go.
There you go. Thank you. Because he's a senior loan officer at Barrett Financial Group for over 8 years, starting back in 2017. Alec, you ran your own broker shop for 20 years, so I think you're going to be able to provide a lot of great insight. You're a true seasoned veteran who has been capturing more relationships and more closings with your knowledge of this product, so we're glad to have you on this call. And I also want to introduce you to Cecilia Estrada. She's our business development manager. She's oversees our product strategy regarding all things non-QM. She's been an integral part of our partner education and training. I do want to kind of give you guys a little bit of highlights. You're able to, if you don't see it, you should see it somewhere at the bottom. There is a chat feature. Jevon's done a great job with our past webinars and being able to answer questions as they go. If we don't get it answered on this call, we'll make sure we'll get an answer out to you, but feel free to ask as many questions as you want in the chat. I am looking to now turn it over to Cecilia now to talk about our self-employed alternative documentation product that we call the Smart Self Series. So Cecilia, I want to turn it over to you.
Thanks, Don. And thank you everyone for joining in today. Like Don mentioned, we are going to be focusing on one product a week. We've done our entire non-QM product suite in the past, but we want to go a little bit deeper, give you a little bit more time to digest the information for each of the products. So today we are focusing on our self-employed options. These are the borrowers that are usually the ones that find themselves struggling when it comes to income documentation, right? So we need alternative options for them. If you're a self-employed borrower, if you've got self-employed borrowers, entrepreneurs, freelancers, gig workers. So these are the ones that we're going to focus on. We're going to focus on their deposits, what their business is doing, how long they've been running it for. We're going to give you some options for those self-employed borrowers if the traditional route of income taxes is not working for them to qualify. Okay, we're going to focus on all the options that you have. So for anyone out there who hasn't seen our products before, we do have a Smart Series for non-QM. So our self-employed alternative doc is called Smart Self. You'll see that name there at the top right. Smart Self is just a smarter way of working with a self-employed borrower. There's a lot of things that we can do here with this product. You'll see a small grid there on the right-hand side. We can do all transactions, right? So purchases, rate and term refis, cash out refis, and you can work on all occupancies as well, whether it's primary homes, second homes, or investment properties. You'll see loan amounts as small as 100,000 to as high as 3.5 million. You'll see down payments as low as 10% on our primary homes, as low as 15% on our investment properties. right? So there's a lot there to work with. And some of the things that you'll see along with this product, I've listed on the left-hand side. So number one, we are focusing on a self-employed borrower, right? And the income that they can provide and not use the traditional stuff. So the very first thing that I listed is what are the options that you have? You've got 3 options, and we're going to go into those a little bit deeper in the next slide. But you do have 3 options for your borrower. You've got the bank statement option, where they can use a personal checking or a business checking account. We'll look at the most recent 12 months and look at the deposits there. Or if they happen to be a contractor, we can also look at the most recent year's 1099 form and go based off of the income that they have listed there. Or last but not least, we have a profit and loss option as well. That's actually our newest feature on this product, is the profit and loss option. And we're going to give you a little bit more detail as that as well. However, one of the biggest things to remember is just because you're working with a self-employed borrower and they're using alternative income, right? Non-traditional income doesn't mean that you can't use all of the other good stuff that you can get on a traditional loan. So you'll see there on number 2 that yes, you can use other sources of income. What that means is if you have a co-borrower, or even if your self-employed borrower has additional income, right? Let's just say that they are also receiving SSI or disability income or something like that. Or maybe they have an investment property and they've got rental income. You can still use that income. If you've got a co-borrower with a pay stub and a W-2, you can still use that income. So this product is focused on the self-employed borrower and making sure that we give them the alternative options for their income. But all the other stuff that we can use typically on a traditional loan, on a conventional loan, you're still going to have here. Okay, so that's super important. Also, when it comes to the debt ratios and things like that, people are usually concerned about that, right? Because usually those numbers are a little bit tight on the conventional side. Here, we're only looking at the bottom line. We're only looking at the back end ratio, which we allow you to go to 50%. And even if that was a little bit tight and we needed to go above that, we can look at an exception to going further than that. So those are always possibilities, right? Then surrounding properties, we also have a variety of different properties that are eligible for these non-QM products, right? So non-warrantable condos are a huge part of what makes up non-QM. If you're trying to buy a condo just for affordability reasons, or maybe you want to refinance a condo, maybe that condo is not warrantable anymore. It's not approved by Fannie Mae, right? So if that's the issue, if that's the situation, that's also something that we allow on our Smart Self product, is non-warrantable condos, condotels. We can do up to 4-unit properties. We can do large acreage as well, right? So all of these things that you get on the conventional side, still you can get on this alternative doc product. Okay, and then credit. If you look at that grid on the right-hand side, you'll see that our minimum credit score is a 640. So it's fairly low, right? We're not going into the 500 range, but we are on the lower end of the 600 score range, right? So when it comes to other issues with people's credit, if it's not perfect, it's okay. You'll see that we do allow for bankruptcies. We allow for foreclosures. There is a seasoning period, meaning how long that it's been since that event. We usually want to see at least 2 years, but we are giving your borrower a chance to come back and purchase a home if that's what they want to do, or refinance, right? And then if you happen to be working with a borrower who doesn't have the full down payment that's required, we do allow for gift. Someone can gift them a portion of the down payment, the closing costs, the reserves that they need, things that they need to finalize the deal and close that loan. They can get a gift from a family member, right? And these are all manually underwritten loans because these are non-QM loans. These are non-qualified mortgages, meaning that we are not going to run an AUS. Your automated approval, we're not going to run it. It's a manual underwrite. And also, regardless of your loan amount, regardless of the LTV, the loan to value, there's no PMI on these loans. Okay. Now, Alec, I know that when it comes to non-QM, I think that no AUS and no PMI is probably a huge deal. I know that you work with a lot of self-employed borrowers. Are there any little features here that you lean on the most when you're looking at this product?
Thanks for asking. A couple of things. One is done self-employed for many years and having to deal with going through business tax returns, personal tax returns, going through all of the AUS rules is a lot of work and doesn't always end up working out for the borrower. So being able to get 12 months bank statements and apply an expense factor to that and come up with income before we even start working on the loan is a big plus, right? So it just makes you never want your borrower to sit in the dentist chair and have their teeth pulled. And so to be able to look up front to see what we're dealing with, credit score is okay, funds to close is okay. So it just makes the whole experience much better for the borrower and me as well. So.
Yes. And I'm glad that you brought that up about getting the income reviewed ahead of time, because we are going to show our brokers a little bit about that in the next couple slides. So when it comes to that first line where we're actually giving you the options of what you can do, we're going to dive a little bit deeper, right? So the first option that you have for your self-employed borrower's income is to use bank statements, right? So what we're looking for is someone who's been self-employed for at least 2 years, running and operating their own business. And if they have partners, it's absolutely okay. As long as they're at least a 25% owner of that business, then it's okay. They're eligible, right? They don't have to be 100% owner of the business. They can be at least a 25% owner. They do have a choice between using a personal checking or a business checking, whichever one they're using for that business we can work with, right? And you also have options of using the most recent 12 months of their deposits or the most recent 24 months of their deposits, right? We're going to actually take a look at those bank statements. We're going to take a look at all of the deposits on there. We have a non-QM team that does it, and we'll actually show you a slide on that as well in a little bit. We have a team that's going to do it for you, so you don't actually have to do the review yourself. One of our non-QM underwriters in the background is going to do it for you, and they are going to tell you, hey, this is the income that we came up with looking at these bank statements. So it's going to be super easy. And like Alec mentioned, we can do it as a pre-approval. We can do it as a TBD, meaning that you don't have to have a loan in place. You don't have to have a property selected yet. You don't have to lock a loan or anything like that. If you're just kind of getting started with your borrower and you're looking to see what they qualify for, just give us those bank statements and we'll take a look. Okay. So if you do use that option with that 2 years of self-employment and we're using those bank statements, then on a primary home, you'll see there, you can go as high as 90% LTV, which means your borrower only needs 10% down for a primary home. Okay. Now we have another option for borrowers that have not been doing that business for that long. So if you have someone that's been operating that business for just a year, not the 2 years, just 1 year, we have an option for them too. Okay. So that's a little bit lower. That'll be the next bullet, right? So what we want to see from them is at least 1 year operating that business and that they've been in that industry overall for at least 5 years. So what does that mean? So let's just take someone, for example, who is a chef at a restaurant, right? And they've been working at that restaurant for the 5 years, and they've done so well as a chef that they decide, you know what, I want to open up my own restaurant now. I want to own the restaurant. I don't just want to be the person who cooks here. I want to own the restaurant. So now they open up their restaurant and it's been a year and it's going great. And now they want to purchase a home, even though they've only owned that restaurant for 1 year, because they've been in that business as a chef in the restaurant business, they would be eligible because they've been doing that for 5 years, although their business has only been operating for 1 year. So we have options for borrowers that only have that business for 1 year, right? And it's still going to be using the bank statements, right? The most recent 12 months, as long as they've been in that industry for the 5 years. However, because it's only been 1 year that they've been operating the business, it's not going to be 10% down. It's going to be a little bit more. You'll see that further down. It's highlighted in green. we're going to be at 75% LTV, right? So 25% down if they wanted to do a purchase on a primary home. All right, so you have options, whether it's been 1 year of them owning that business or 2 years of owning that business. Now, Alec, what would you say is the percentage of you seeing 1 year versus 2 years of self-employed with your borrowers?
All of the bank statement loans I've done have been 2 years or longer. So I've never actually had a client that was less than 1 year.
Less than that. Okay. But it's nice to know that you have the option in case you get someone who just started a new business, right?
Yeah, correct. Not even FHA really does that. So
And then the next option that you have is a super simple and easy option. It's the 1099 option. So this is for those borrowers that are contractors, right? All we need is for them to be doing that for 2 years. Same thing, just 2 years. As a contractor, someone who is, for example, a real estate agent, or maybe they're a driver, they work for Uber, they work for Lyft, they are contracting with that company. So they actually do work with that company. They get a 1099 form at the end of the year. They have to pay their own taxes and things like that, just like if they're self-employed, truly self-employed, right? So that's a contractor. The 1099 form is super easy and simple for them. So all they have to do is give you a current pay stub. They still do get a pay stub and last year's 1099 form. So it makes it very easy in terms of paperwork. You don't have to collect much, right? And same thing for these borrowers. If they want to do a primary home, they want to purchase a primary, just 10% down. That's all you need, right? So we're giving them that higher LTV for people that are 1099. We treat them just like a borrower that's using bank statements and they've been self-employed for 2 years, right? This is just a different form. It's just a little bit easier. Then we've got our last option, which is actually our newest option. This is a profit and loss, a P&L, right? So this is for someone that's actually going to write out a form of all of their business operating expenses, all of their gross receipts, their net profit. They're actually going to list everything that they've earned in the most recent year, everything that they've spent back into the business, and what their final profit was, right? So if they cannot provide bank statements for the most recent 12 months for whatever reason, or maybe they don't have consistent deposits, whatever the situation is, right? Because every business is different. Not every business is getting deposits every single month. Then we have this option, the profit and loss option, right? So for this one, your borrower, again, needs to be self-employed for 2 years, operating that business. But here, instead of being a 25% owner, we need them to be the majority owner, which means over 50%, whether it's 50.1 or 51%. They need to be the majority owner of that business, right? Usually we notice that our borrowers tend to be 100% sole proprietors, but if they do have partners, make sure that they are the majority owner and they've been operating that business for 2 years if they want to use the P&L option. Now, what I want to draw attention to is that third bullet down in green, where it says that if you keep your loan amount at $1 million or less, you don't have to provide any deposits to support that P&L, right? So that's really the outstanding feature on this product for P&L, that you don't have to provide any bank statements to support it. Most lenders may ask you for bank statements. If we're at $1 million or less, we're not going to. Now, once you go over $1 million, we will ask you for 2 months of statements to support the income that you have listed on the P&L. But if you stay at that $1 million or less, we're not going to. And then again, on your primary homes, you need 25% down. We're holding it to 75% LTV for anyone that's going to use a P&L. Okay. And Alec, I don't know if you've used the P&L option yet. It's a newer option. I think we've had it out for about maybe a month. Have you had any luck with it so far?
have not looked at it a little bit, but haven't used it thus far.
Okay. And so for anyone that has either of these options, right, whether it's bank statements, personal or business, 1099s or P&L, you're going to have the ability to log into our system, which we call Blueprint, right? This is our broker portal. You're going to be able to log into our system and use our resources tab. You'll see it there highlighted towards the bottom on the right. our resources tab. And then once you click on that, you'll get a drop-down menu. And that drop-down menu is going to have an option that says self-employed income request. You will click on there and there'll be a little paper clip. You can attach what you have for review. You can attach your 1099s, your P&L, your bank statements. You'll give us a little synopsis of the business, of what it entails, what it is, and then hit the send or submit order button. It'll go on the other side. It'll go to one of our non-QM underwriters. They will review everything for you, and then they'll get back to you. They'll email you back. And it typically takes about maybe a day, 4 hours to a day, the rest of the business day, for them to get back to you. If you submit your items at the end of the day, you'll hear back the following day, right? The following morning. But it's usually about 4 hours to maybe 8 hours, just depending on how busy we are. But they are looking at the income for you ahead of time. So you can do this as a TBD, as a pre-approval, and they will actually give you a worksheet and tell you this is what the income is that you can use for your borrower. So it's really super easy, really neat. And Alec, I know that you probably use this option quite often, right? Like you mentioned.
Absolutely. Yes, yes.
Yes. Okay. So, oh, Don, it's a little bit low. Did you say something?
I was just saying, there's so many companies out there that have the AE do it, or they rewrite the income after it's submitted. You want confidence in what the income calculation is, because if you don't have that kind of confidence, I'm assuming, Alex, it's hard to tell your partners or even your realtors that you're earning all this additional business from, what kind of income, and that it may not change, right? You were talking about that confidence, so I'd love to know a little bit about that.
Yeah, so typically is a realtor says, I've got this client, self-employed, could be difficult. Can you pre-qualify them, right? That's what we do. So I call them, get their bank statements, go through them, then I can come back in confidence with pick a number, $30,000 a month as an income place. Then I can do an actual pre-qual and have confidence with those numbers. I just closed one with Libby first of the year, had a couple of assisted living homes, was somewhat complicated. But the easiest part of that transaction is I had an income number up front that actually stuck to the transaction all the way through closing. So it's a big deal. It really is.
Yes, yes, absolutely. And Alec, what we wanted to get a little bit of your take on what do you really use in terms of the features that we have to offer for our self-employed borrowers? What do you really use to kind of attract your borrowers to that product? If they're a little bit more used to conventional products, how do you go about selling them this product and saying, hey, we're not going to use your taxes, we're actually going to use bank statements to qualify you?
Right. So we all know business has sort of slowed down the last couple of years. I've been in the business since '87, and before Dodd-Frank, there was a lot of options out there, no doc types of programs for self-employed. Well, that all dried up. And so the non-QM sector has really come to its own. There's a lot of secondary market interest now in these type of products, right, that really validates them. And so what I did about a year and a half ago is say, what am I not seeing in the market? Where am I being blind? What's going on? And I had talked to Libby, great rep. She had talked about the 12-month bank statement. So I really did a deep dive in that. I was one of Libby's problem children for quite a while. I wanted to get trained very well. But this is a fantastic product for self-employed borrowers. Being able to get income, tax returns are tough, right? So the loan has to be reasonable, a couple years in the business, a decent credit score. So all of the normal things apply. I don't look at this as, forgive me, we want your junk loans, give us the ones you can't get done. It's like, look, I'm not talking about junk loans. I'm talking about very good borrowers in a self-employed business owner and somebody with a great CPA. So it creates a whole area in the market of people that aren't being served. So this type of product is absolutely perfect. So to be honest with you, in 2024 and year to date, a large part of my business has been 12-month bank statement loans. It's been very lucrative on the commission side. But your question was, what do I do to attract business? Well, over the years, I've got a good circle of relationships. I just call them, say, hey, I noticed you've got a listing for 900,000. Just to let you know, there's some great products for self-employed. I go through the rules that you just did, basically, and just say, hey, look, if you get somebody that is self-employed and tax returns, et cetera, don't work, give them to me. Let me talk to them and let's go through it. So I directly go after that segment. There are things that work together. Self-employed people, by and large, if they're consistent, make good money, right? And so they're good borrowers. They buy higher end homes. I think the largest loan I did with you guys with Libby was 2 million. I did three $2 million loans, and I've done loans down into the 400s. So, but the point is, there's this borrower out there that loan officers can go after and let my realtors know, my warm market know. And and again, I want to go back to the fact that I can get income up front, be confident in that, because there's nothing worse than, shouting off your mouth that you've got this great thing. You go out there and the thing just blows, the wheels come off three-quarters of the way through. Oh yeah, we decided your income's really half of that. That's tough, right?
Yeah.
But I've been working these with Lib about a year and a half now, and it's something we can count on. And the other thing you talked about a little bit was exceptions. They got to be reasonable exceptions. Somebody has an 80% debt ratio. That's not a reasonable exception. But I've gotten several exceptions that, as time went through the transaction, we got the facts back, things were a little different. I say, well, it's a problem, Lib. She'd say, well, let me call and see if I can get an exception. Okay, do what you can do. And time again, we've got a reasonable exception on these transactions. So I actually am getting a lot of people calling me on a monthly basis, and probably 40-50% of my business right now is non-QM. So
Wow.
anyway, I'm excited about it, obviously.
Yeah, definitely. That's impressive. I'm glad. Oh, go ahead, Don.
I was just gonna say that's a huge number. Not only is it an increase in your production and revenue, but I think you were chatting a little bit the other day about being able to even source new realtors. Like, are you able to go out there and capture more realtors just because you have access to this type of product?
Absolutely. And again, loan officers always calling realtors. Realtors like, yeah, great, great. Tell me your story. But to have something we're talking about, it's like, no, I get it. So I just want to touch base. Look, I saw your listing in Tempe for 1.4, right? That's probably going to be bought by somebody who's self-employed. And I know you're the listing agent, but as you're talking to the buyer's agents, look, if there's an opportunity for me to come in and work with these borrowers, so it's a different story, right? It's a different tool. It's not just yay, it's me, hope you use me, but I go after it, right? And be very specific, right? This is what this is very good for. You're going to run into borrowers with your listings. You're going to run into clients that want to buy, and call me. Let me deal with the borrower directly and go through it and let you know what we have. Realtors want to get somebody pre-qualified and know up front before they spend time in the car, do I have somebody that can qualify? And again, I know I'm harping, but it all starts back in the beginning with, can I get an income number, right? Because
Exactly.
that's really where we go. I can see your credit report, right? I can see your FICO score. I can see your money in the bank. Been on, business 2 years, whatever. Those are basic. But if I can get the income is the big issue. If I can get that number up front, that really helps. So I've had a lot of success, a lot of feedback, a lot of referrals. So I just think if other LOs get to know this product and really think about, how much business is going out there that's not, AUS type business. And I know things have been slow, but there's a lot of stuff going on out there. And this has helped me focus and increase my business.
Thank you. Thank you, Alec. And Jevin, I wanted to ask, because I know you're manning the questions, are there any particular questions that are coming up a bit that maybe we want to clarify, or anything that you see that needs a little bit more attention?
No, I don't see too much coming through, other than the exceptions, that Alec, touched on, right? Where it's non-QM, we have to meet our guidelines, of course, but we want to make good decisions and make exceptions where they make sense and they have compensating factors to support it. And we can also do that upfront before you submit us a loan. So if you know you need the exception, we can review it prior to sending us the loan to make sure we can do it beforehand. So that's a good thing available to you through your AE.
Yes, yes. And speaking about the AE, Libby, I know that you probably do get a lot of upfront exception requests. So again, anyone who has exceptions, you can reach out to your account executive or to Libby if she's your AE and walk through what that process would be. It's fairly easy. Do you want to go over it really quickly, Libby, and kind of
Sure.
give a little?
Yeah, so basically, in order to get the exceptions, we can do it up front, or sometimes you get exceptions that you need once the loan has been submitted. So I just two that come to mind right now are acreage and debt ratio. So a lot of people believe that non-QM cannot be rural, and that is not the case with Newrez. 20 acres is in our guidelines, and we'll go up to 40 acres with an exception. The next one is also DTI. Our guidelines do say 50% on bank statements, but with an exception with strong compensating factors, we can actually go up to 55% debt ratio. But knowing that if we get an upfront income and assets, oh, it's 50 acres. So Jevin just said, so up to 50 acres, we can get an exception. So just knowing that exceptions are possible, because Newrez, we're on this product, it is our money. We are the investor. So our team can make decisions. And that is also, we also do the servicing. So that is also something a lot of borrowers are happy to hear about.
Yes. And that's really what we want to show our brokers, is that not only do we have the consistency of the guidelines and the product matrices and things that you can follow, but when it comes to, you know, just going a little bit further outside that box, it's something that we are willing to work with you. Okay, so you can reach out to your account executive if you don't have one. You know, you can drop your email in the chat box and we'll get back to you. I know that everyone, when they registered, they had to fill out their information, you know, how you were invited and things like that. So we hope that you enjoyed this webinar. We made it a little bit shorter, a mini webinar, just to focus on our self-employed product, Smart Self, and give you the options that you have for your self-employed borrowers. Again, stay tuned for the following weeks. Every Tuesday, except for one of the weeks is going to be on a Wednesday, we will be bringing you information as to our DSCR products, our jumbo, our asset-based products, a little bit of everything every week, a short little review to give you a little bit more clarity on what we can offer you. Thank you, everyone, for joining us today, and take care. Have a great day.
Thank you again, everyone.
Thank you.